Okay, welcome students. Today's topic for discussion is meaning and types of equity shares. So, under types of equity shares, we have ordinary shares, preference shares, bonus shares, and rights shares. Let us see the explanation of each and every type of the equity share. And before that, what is the meaning of equity share? See, basically, equity shares gives you a ownership in a company. If you purchase the share from the company, you become an owner. That represents the ownership, and that entitle the shareholder to a portion of a profit. Okay, so the key feature here is ownership stake. You get a voting rights, where the voting rights are not available in case of the preference shareholders. So when you are an equity shareholder, you enjoy voting rights, you enjoy ownership, and you are eligible to get the residual claims on asset. What is meant by residual claims? It is nothing but after giving profits to the debentures, that is the interest amount to the debentures, and after satisfying the preference shareholders, after paying dividend to the shareholders, the remaining, the residual claims left out will be given to the equity shareholders. Yes, this ordinary equity share, what does it mean? It's a general, a standard type of an equity share that also represent ownership, and it normally has the voting rights. And these kind of shareholders, they receive dividends based on the company's performances and profits. To give you an example, say you are holding shares of Apple Limited company. That means you get a voting rights and you also get a ownership. So this is an ordinary equity share. Next, rights issue we say, or rights equity share. See, this type of equity share is available only to the existing shareholders. Remember, this is available only to the existing shareholders, and that too at a discounted price. It is quite less than the current market price. Okay, say for example, a company may issue the right shares. Why they issue the right shares? Because the company needs additional capital. So it offers only to the existing shareholders an opportunity to purchase more shares at a lower price. Okay. Yes. Next, bonus equity shares. What do you mean by bonus equity shares? Again, this is an additional shares again given to the existing shareholders without any extra cost. Okay, in rights issue, the company issues to the existing shareholders at some discounted price. But here in bonus equity shares, it is again given to the existing shareholders but without any extra cost. Okay, and it's like a reward given to your shareholders. Okay, and where it has been taken from, it will be taken from the company's reserves. Say a company issues bonus shares in a ratio of 1:2 ratio. That means the shareholders will get one extra share for every 2 shares held. See, if I have 2 shares, I will get one bonus shares. So 1:2 ratio. One bonus shares, 2 existing shares. Then preferred equity shares. Shares with the preference over ordinary shares for dividends and asset liquidation. So what does it mean? Say for example, here see, normally equity shareholders do not have a preferential rights. They have only differential rights. That means they have a voting right and they are eligible to claim the residual profits, and they get a ownership, but they do not get any fixed dividend. But there are some equity shares which are said to be preferred equity shares, where they are eligible to receive fixed dividend, and they have priority over ordinary shareholders in asset distribution. Next, convertible equity shares. There are shares that can be, uh, debentures can also be converted to shares. But the shares cannot be converted to a debenture. Remember, okay? So shares can be converted into other securities also, say as an ordinary share. So if you have a convertible preferred shares, that can be converted into an ordinary share. See, your ordinary share is basically an equity share. So when you have a preference share, that is preferred share, you can convert with the ratio of 1:1. But this will happen only after 5 years of possessing your share. Okay, after 5 years only this conversion can be undertaken. Then non-convertible equity shares, uh, again as I told you, this shares cannot be converted to other securities. So this ordinary share remains as an equity and they do not have the nature of conversion in any other form of security. But they have a ownership stake. Redeemable. The redeemable preference shares that can be repurchased by the company after a certain period. Say in our example, we have a 5-year maturity redeemable preference share. Once the company reaches the 5-year maturity, they get back or buy back the shares from the shareholders and pay back the money to the shareholders. The non-redeemable equity shares, the shares cannot be redeemed, or the shares that cannot be bought back by the company. So, for example, the standard equity shares that exist perpetually as long as the company exists. So, the common shares that remain with the shareholders without any redemption option. Yes. See, the main comparison between the equity shares and the preference share is equity shares or the shareholders offer voting rights. They have a high returns, capital appreciation, but for the preference shareholders, they get a fixed dividends, they get a preferential rights, and they will be given priority in liquidation. And what are the pros and cons? The equity shares are they have a growth potential, but it is risky. Whereas the preference shareholders, they have a stability, but only limited returns. So, example, comparing the common stock and the preferred stock in a company. So, if you take the example, like companies like Tesla and Microsoft, they normally go for issuing equity shares, whereas the company like Coca-Cola, GE companies, they would prefer to go for issuing the preference shares. Equity shares will engage these companies to raise a capital and that would also enable them to go for a stocks split that provide more accessibility to the retail investors. So we have covered the meaning and types of equity shares, their characteristics and examples. So please feel free to ask any questions and you can also post it in the comment section. Thank you again for patiently listening the lecture. Thank you.